It's Monday, January the 27th, and I'm David Song, currency analyst with Daily FX. Just a few key things I want to cover in terms of the British pound and, of course, the upcoming advanced fourth quarter GDP report coming out of the UK. And let's talk about the data a little bit. So we're looking for a quarterly print of 0.7% for the last 3 months of 2013. Of course, that compares with a growth rate of 0.8% that we saw back in the third quarter. So in light of the recent themes we saw coming out of the UK, of course, the stronger than expected recovery, do see a risk that we might see a strong GDP print. And of course, should that come into place, could put further pressures on the BOE to move away from the easing cycle ahead of schedule, and of course might bring up some expectations that we might see a rate hike ahead of schedule there. So let's quickly look at the price action right now in terms of the British pound, where we're seeing it continue to maintain the bullish trend here in terms of the price itself, dating all the way back to July, and of course even with the RSI momentum signature as well. Some key things that we were watching over the last few days, of course, this nice break that we had in terms of the bullish momentum to retain the bullish sort of picture that we've been watching for quite some time. So with that in mind, guys, it looks as though, of course, higher low carved out right around 163. It looks as though we have yet to carve that higher high. So depending on how that GDP print comes out, might be watching or looking for some fresh highs there. Of course, some levels to watch top side, 167 handle could be very important, but something that I have on my chart here that I'll be watching is going to be this 100% extension right around that 6720, 6730 region top side. So it'll be, again, still looks as though we have yet to mark the higher high in the British pound. And of course, we'll be watching the RSI structure in tandem with some of the market reactions we'll see tomorrow. But on that, guys, of course, ahead of the FOMC, just be very mindful that it looks as though market participants are in fact waiting for the Fed, as we saw a very limited reaction to new home sales early this morning, which of course came in much weaker than expected. But with that, guys, just be mindful of all the key events that we have on tap this week. And as always, guys, stay prudent and good luck trading.